Hello and welcome to this weekend special of Money9's Companynama, where we try to bring a weekly roundup of major corporate and startup world updates in one single package for you. I'm Shrestha Tiwari. Let's take off with the corporate world updates first. Sony India and Zee Entertainment Enterprises have agreed to sell 3 Hindi channels, Big Magic, Zee Action and Zee Classic, to address anti-competition concerns arising out of their proposed merger. The broadcasters submitted their proposal to the Competition Commission of India, which gave a conditional approval on October 4th. Incidentally, all 3 channels belong to the Zee network, and to put things in perspective, the merging firms have a combined viewership share of 36% in Hindi general entertainment and 33% in Hindi movies. Dabur on 26th October announced the acquisition of a 51% stake in Masala for a cash consideration of 587.5 crore rupees. The acquisition is expected to be completed before March 31st, 2023. The company has said the acquisition will be subject to the fulfillment of terms and conditions as per the share purchase agreement and shareholders agreement. Dabur has said that the acquisition was in line with its strategic intent to expand its food business to 500 crore rupees in 3 years and expand into new adjacent categories. This will also mark Dabur's entry into the over 25,000 crore rupees branded spices and seasoning market in India. The country's largest cement maker Ultratech will increase its capacity in India by a third by 2025-26, which is FY26 from the current levels. At a consolidated level, including international operations, Ultratech's cement capacity stood at 121.25 million tons per annum at the end of Q2 from 120 million tons per annum achieved earlier. By FY26, the company is looking to touch around 160 million tons per annum in terms of capacity. Adani Group may soon launch a fleet of passenger vehicles that will list on ride-hailing platforms such as Uber in 7 cities where it operates airports. As per a report in the Economic Times, Adani Group, which operates 7 airports in the country, has already been in discussions with Uber to chalk out a plan. Notably, the 2 companies recently announced a partnership under which Adani Airports now has dedicated pickup points for Uber at 5 of its 7 airports. Shares of FSN E-Commerce Ventures Limited, which runs online beauty and fashion retailer Nykaa, sank 2.9% on October 25th, pushing the stock below its initial public offering price of 1,125 rupees. Nykaa shares have tumbled 13% in the past month, ending at 1,110 apiece on BSE on 25th of October, ahead of the 10th November expiry of the 1-year lock-in period for its pre-IPO shareholders. Nykaa had made a strong market debut last year in October when the company's stock had listed at 79% premium to its issue price at 2,001 rupees per share on the BSE. Shares of oil to telecom major Reliance Industries rose nearly 1% during the special Muhurat trading session on October 24th, which was the first trading day after it announced the results, after the company said that it will demerge and list its financial services business housed under Jio Finance Services. On October 21st, RIL announced that shareholders will get 1 share of Jio Financial Services for every share held in the company by them. In other news, Reliance retail arm Reliance Retail is expanding its business into the fast-growing toy sector through its brand Rowan to operate in affordable segment with a smaller shop size. The company was running its toy distribution business through Rowan and has now brought this homegrown brand to the front end by opening its first exclusive brand outlet at Gurugram in NCR. SpiceJet will be able to operate at full capacity from October 30th as the Directorate General of Civil Aviation has lifted its restrictions on the low-cost carrier. As previously reported, the Directorate enforced a measure in July that halved the airline's approved fleet, putting it under enhanced surveillance following a spate of air safety incidents and degraded safety margins during 2022. The restriction was initially for 8 weeks, but in September, the DGCA extended the period of the constraints until October 29th. Aditya Birla Sun Life Insurance has announced the launch of India's first instant policy insurance service on WhatsApp. ABSLI has partnered with Gupshup, a leading conversational engagement platform, and Meta-owned WhatsApp, world's most popular communication channel, and also Karza Technologies, one of the largest data analytics, automation, and decision solution provider, to FIs to launch this service for insurance applicants. And a lot of corporates were found neck deep in trouble this week. Let's find out which were those companies that were surrounded by controversies and on the radar this week. In its second ruling against Google in less than a week, the Competition Commission on 25th October slapped a penalty of 936.44 crore rupees on the internet major for abusing its dominant position with respect to its Play Store policy. The regulator has also directed the company to cease such practices and carry out various measures to address the anti-competitive issues within a defined timeline. Earlier, on October 20th, the watchdog imposed a penalty of 1,337.76 crore rupees on the company for abusing its dominant position in multiple markets in relation to Android mobile devices. Following the CCI order, Google has said that in a statement that it was evaluating the next steps, but also added that developers had benefited from the flexibility and choice provided by its operating system Android and Google Play Store, as it kept costs low and hence made it accessible to people. PC Jewellers on Thursday announced its second quarter results and has said that it has defaulted on 3,466.28 crore rupees loan facilities from banks and financial institutions. It has informed the stock exchanges that the status of the holding company's borrowing accounts is non-performing with all banks. In a stock exchange filing, the Delhi-based company has said that the total loan amount outstanding as on date was 3,466.28 crore rupees, and that was the amount of default for quarter 2. The Kirloskar Industries Board on October 22nd called for an extraordinary general meeting of Kirloskar Brothers shareholders seeking a forensic audit of the affairs of KBL by an external agency as the feud between the Kirloskar siblings simmers. In a regulatory filing, Kirloskar Industries, which holds 23.91% stake in KBL, has said that its board had accorded approval to requisition at an EGM at a meeting held on October 21st. SEBI has barred Bombay Dyeing and Manufacturing Company Limited along with its promoters Wadias and Sons from the securities market for 2 years. This move comes in as a consequence of their involvement in a fraudulent scheme of the firm's financial statement misrepresentation. In a recent order, SEBI has also restrained them from holding the position of director and from being key managerial personnel in a listed company for at least 1 year. A penalty of 2.25 crore rupees has also been levied on BDMCL and 4 crore rupees on Nusli Wadia and 5 and 2 crore rupees respectively on Jahangir and Nes Wadia. Direct-to-home TV service providers will be subjected to a special audit by the Comptroller and Auditor General of India over their long-running dispute over license fees. The office of the CAG has been asked to conduct the audit by the Ministry of Information and Broadcasting. According to a report in the Economic Times, an intensive audit of the service providers like Airtel Digital TV, Tata Play, Dish TV and Sun Direct will be conducted by the government going back to a year of the start of these companies. This will also be done to ensure that the amount to be submitted to the centre in the form of the license fee is correctly assessed. Well, those were all the big corporate world updates this week. Before we get going with startups, if you are an ardent stock investor, then you must check out Money9's monthly special Stock Central to brush up on all your stock trading skills. Over to this week's startup world updates. Even as cash crunch continues to engulf the Indian tech sector, venture capital firm Sequoia India is reportedly mulling investing $50 million in its portfolio startup K12 Techno Services. The round is yet to close, which also saw K12 engage with VC majors such as TPG and Accel engage with the startup in the recent weeks. K12 offers school management softwares to more than 300 schools while competing with players like Educomp and Educare in the school management platform domain. In another instance of a startup reporting widening losses due to high ESOP costs, Bengaluru-based edtech unicorn Unacademy saw its consolidated losses widen to 2,848 crore rupees in the financial year 2021-22, and it was up by 85% year-on-year from the 1,537 crore rupees in FY21. Unacademy's employee stock ownership plan costs rose by 2.5 times during the period, and Unacademy's total expenses grew to 3,703 crore rupees in FY22 from 2,030 crore rupees in a year earlier. The company's ESOP expenses accounted for 33% of the company's total expenses. However, consolidated revenue from operations surged more than 80% to 719 crore rupees in FY22 compared to 398 crore rupees in the previous financial year. The Kerala government on 27th October called for a meeting with the executives of Byju's on November 2nd to find an amicable solution regarding forced resignations of nearly 170 Kerala-based employees of the edtech firm. Though a meeting was called by the officials of the Labour Department on October 25th, the company did not participate in it, citing short notice. It was on 25th October when Kerala's Minister for General Education and Labour, V. Sivankutty, posted on Facebook saying Byju's has allegedly closed down their Technopark Thiruvananthapuram office, with employees having job loss complaints, and that the Labour Department will conduct a serious inspection in this matter. Post this, more than 170 employees who were working in the branch met the State Labour Minister and seeking compensation and pending salaries. According to Bain & Co.'s India's FinTech Report 2022 published on 19th October, the boom in smartphone adoption in India set to breach 1.1 billion units by FY26, which could push the net valuation of FinTech services by 3.5 times in India from $100 billion to $350 billion in 4 years. By 2026, FinTech startups may account for 15% of the domestic financial services industry, up from 7% currently. Bain expects India's financial services market to grow from $1.3 trillion now to $2.3 trillion by FY26. Well, this was it on this week's Companynama, and before we come back with another roundup of corporate and startup world updates, next week we're happy to tell you that Money9 app now has 150k plus app downloads. Well, keep supporting us and watching our exclusive personal finance content available on Money9 app, which is just a click away on your Google Play Store and App Store. That's a wrap. Adios and stay tuned to Money9.